I'm Dan Fitzpatrick at StockMarketMentor.com on Monday, May 6th, and today I want to look at LinkedIn. Now, last week the company announced earnings and the market didn't like them too much. You can see how the stock fell. Massive volume on Friday. I was looking at it on Friday, considering maybe picking up some stock. I have not. I actually can't say that I've ever been long this stock. I'd like to lie to you and say that I bought it sometime down here and sold it last week, but I'd pretty much be lying. I think that I have not traded this stock. However, I will probably not be able to say the same thing at this time tomorrow, because I'm looking at this stock and the way it's stabilized, up 0.76% after the fall that it's had. I don't look at this as an up day. I think it's just a stabilizing day. The 50-day moving average is holding. Uptrend still very much intact. If this trend was in danger, if the stock was essentially done going up, you'd have seen a lot further drop closer to the 200-day moving average. So what my suggestion is, and this is what I'd be looking to do tomorrow, is keep a stop below Friday's intraday low. Look to take some stock, and as soon as you are involved in the stock, zoom back out, look at the weekly chart, because this is really the trend that you should care about. If you're just always focused on the daily chart, you're going to get, you're going to get shaken out of the stock. And one other thing, when I buy this tomorrow, I'm going to take a small position in the stock. I'm not the type of trader, and approaches vary, and if it works for you, then you definitely don't want to deviate from that. But I'm not the type that, quote, makes big bets. I don't just look at this and say, okay, bam, this is my opportunity. I'm going in big, and then watching the stock go to 200 bucks. Because I'm not sure about that. It's speculation. You look here at the weekly chart. Does this look like a juicy chart? It really doesn't to me. It looks kind of a little bit sloppy. You could say, my gosh, the stock could fall like 30 points and there would still be nothing wrong with the uptrend. Well, I'm not going to hold a stock that falls 30 points unless I happen to own Berkshire Hathaway A shares. I'm just not going to do that. So I would take a small position in the stock, and then once I start getting to feel good, once I start getting a sense that the stock is in fact moving higher, then I'd look to buy some more, even at 180. I get a lot of times, I get asked a question as far as like, well, when you talk about adding to positions, when do you add? Is there a percentage or a point or a time period, something like that? And honestly, there really isn't. I don't think that formulas like that lend themselves to effective trading. I think you want to make discretionary decisions based on some subjective feeling that you have. And so in this case for me, the stock's at 176, 177. If the stock starts trading up above 180, that's when I would want to add to the position, because I'd feel confident that this level was going to hold. So I want to take a bigger position, but I'm just not going to buy a falling knife. And so if the stock falls below this level, then I don't want to add to the position. I'll be happy that I have just a small position. If the stock rises above 180, then I'll add some more, and I'll be happy with that. I won't be saying like, oh my gosh, I should have bought more at 177. No, my trade was take a small position at this level and add at 180. If I'm not comfortable with that trade, then I shouldn't be planning to make that trade. So anyway, that's it for this video. And if you haven't tried Stock Market Mentor, I go on about this on about 20 different stocks for about a half an hour, a little bit shorter, typically every day. So I hope you'll check that out. First 30 days, no risk.